Well, the recent market upheaval leaving many investors kind of weary and wary about where to put their money. But even in the bleakest moments, there are opportunities. So joining us, a very special guest, CNBC contributor Ron Insana, author of this new book, How to Make a Fortune from the Biggest Bailout in U.S. History. Congratulations, my dear.
Thank you. Thank you for having me.
It's a terrific book. You have a lot of strategies in here, and you've kind of, what I liked about it is you broke it down into different categories. There's real estate, there's distressed debt, there's municipal bonds, there's tips. It's all the categories that we've been talking about collectively for the last year.
And stocks as well. I mean, you know,
yeah.
I think that Sue and Michelle, as you know, when we've been going through this together now for quite a number of years, there's kind of a generational opportunity to take advantage of the chaos and the dislocation that we've seen in the last 24 months. I mean, it has come at great cost. It has come with a lot of pain. But, you know, market history tells us that when we hit these inflection points, there are also extraordinary opportunities, particularly in the hardest hit asset classes.
Give us a teaser, because we're saying Insana's 7 great investment bargains,
well,
such as?
Well, first of all, if you don't own a home, I mean, residential real estate right now is as depressed an asset class as you will see probably in the rest of our lifetime. I mean, I don't think we're going to experience something like this again. It would be highly unusual. And for people who didn't get a chance to buy homes before, you have an $8,000 refundable tax credit from the government, which you could put toward a foreclosed house, a house that is sold short, a bank-owned house, a new house, whatever you're going to buy. And if you go to Henderson, Nevada, San Diego, California, Phoenix, Arizona, or Florida, where, you know, if you live in the tri-state area, by law at age 60, you have to move to Florida. There are 80,000 condos for sale, you know, in southern Florida. And there are a variety of opportunities just in primary residential real estate, but also as an investment. You can buy for investment purposes as well.
The bank stocks are also on the list, but some of them have had quite a run.
They've had an extraordinary run. As you know, Citigroup has gone from 97 cents to $5 and then back to about $3.60 today. But once the government said they were not going to nationalize Citigroup, that they were not going to let any of the top 20 banks fail, this was a one-way bet. This is something that we know from market history, that you buy the banks, because 5 to 10 years from now, even despite the rally that we saw since March of 2009, they will likely be much, much higher than they are today.
Especially with the steep yield curve?
Yield curve is extraordinarily steep. Banks are printing money at the moment, and as they become more comfortable lending, they're going to make money. Right now they're making money on trading and other activities, but you've got a 400 to 500 basis point spread. They're borrowing at 0, they're doing mortgages at 5. That's huge money for the banks.
You also advocate and talk about TIPS, inflation index treasury securities. And the reason I put that on the list to talk about, among the many other things in the book, is the fact that we have one of the St. Louis Fed presidents talking about whether or not inflation is not the dragon that needs to be slain, if not right now, soon.
I mean, I don't have an inflation worry, Sue, you know, as you know. I mean, I think our bigger risk still is deflation. Should there be a policy mistake somewhere that sends us back into recession? I doubt it. I think this year is a big year for Main Street. Last year was the year for Wall Street. I think the economy grows more quickly than thought. I agree with J.P. Morgan that maybe even there's a turn in the jobs picture this Friday. But if we don't deflate, TIPS are a perfect investment. In Treasury inflation-protected securities, they've been sneaking up lately, but you do get compensated for rising inflation rates by the government. So rather than trying to buy a nominal Treasury bond, which will go down in value as the economy recovers, you can buy a TIP and get all that inflation protection. And you buy Treasury Direct, or you can buy the TIP, which is the TIP fund that's an ETF.
Yeah. Good luck, Ron.
Yeah, good luck.
Great. I can't wait to read more.
You can't read it? No, you can't wait to read.
Actually, it's an easy read. I found it to be an easy read. But
we tried to appeal to all classes of investor.